So you're thinking about moving right here to Houston, Texas, but you're not quite sure what your housing budget is. Well, sit right there because we're about to dive into how to calculate your housing budget. I cannot tell you how many times we've had clients contact us, we get the process rolling, we get them with our lender, they get their pre-approval letter, we set them up on a search, they're looking for homes, only to find out that they've never actually calculated what the monthly mortgage payment's going to be. And I want to tell you there's a big difference between what you're pre-approved for and what you actually want to spend. And so in today's video, we're gonna dive into just that. I'm gonna pull up my computer and we're gonna hop in and we're going to show you how we calculate what your monthly payment's going to be. Because the last thing we want you to do is get pre-approved, fall in love with a home, only to find out that those monthly payments are higher than you're gonna be comfortable with in the long term. We're gonna break down exactly all the different payments that go into a mortgage. So by the end of today's video, you're gonna have a really good idea of how to come up with your perfect housing budget for your move right here to the Houston area. So let's get after it right now. Okay, I have my screen pulled up. We're gonna hop into a mortgage calculator. Before we do, I do want to tell you there is a distinct difference between your pre-approval amount and what you might actually want to spend. And so the first thing we're gonna do when you work with our teams, we're gonna get you with our lender. You're going to fill out their online application, usually in about 10-15 minutes. You can turn in all of your docs to them, and by later that day or the next day, you're gonna be issued a pre-approval. Now, the pre-approval amount we frequently find with clients is issued for an amount higher than what your clients are actually wanting to spend on a monthly basis. And so, for example, you might get issued a pre-approval for $700,000, but whenever we hop into this mortgage calculator, you don't want to have that high of a monthly payment for a $700,000 home. And so you really want to pick your housing budget based off of what you are comfortable with your monthly payment being. So just because you can buy something doesn't mean you should buy something. You definitely want to make sure that our clients are in a healthy range where they feel very comfortable being able to make those mortgage payments for the long term. And so I've pulled up an example here. We're gonna use Zillow Mortgage Calculator. I don't love Zillow, but they do have a good mortgage calculator. So feel free to hop on your computers, play around with this, just Google Zillow Mortgage Calculator. So for an easy example, I plugged in a home sales price of $500,000. This is what I would do if I were you trying to figure out what your housing budget is. So you'd hop in, you'd plug in $500,000. Then as far as down payment, you would see, how much are you comfortable putting down? Usually when we talk to people, they have a pretty clear idea of how much they'd be comfortable putting towards the home. And so on the low end with conventional loans, you'll typically see 5%. And a lot of people think that you have to put 20% down. You do not. The only thing that will change is whether or not you pay private mortgage insurance. And so anytime you put down less than 20%, you're typically going to have to pay a little bit extra in monthly payment. So for example, if you get rid of that PMI on this deal, it's the difference of a couple $100. So it's the difference of $300. And that ranges. There are some lenders with some products that aren't going to have private mortgage insurance, but the general rule is anything less than 20% and you'll be paying private mortgage insurance. Now, we're going to focus on a 30-year fixed. Now, most people right now here in Texas, they don't really get into adjustable rate mortgages. It's pretty clear cut that you're going to go with a 30-year fixed loan. Now, if you are putting more money down and you want to do a 15-year fixed, we see that as well. But there aren't a bunch of different crazy mortgage types that we see. Typically, we're either working with veterans and they're using a VA loan, FHA loans, or the primary bread and butter here is going to be a conventional 30-year fixed loan. So on a 30-year fixed loan, interest rates, unfortunately, as of today of filming this, are right around 6.75. And so at a 6.75% interest rate with only 5% down, you're going to have to pay the private mortgage insurance. Property taxes, I put in a 2.8% property tax. So property taxes in Houston are going to range anywhere from 1.9 all the way up to 3.8. So at 1.9, your taxes are $792 a year on this home. But at, let's just say 3.5, your taxes on this home are $1,458. So that's a difference of $600 to $700 per month just in taxes. And so taxes don't go away. If anything, over time, as your home appreciates, your taxes will get higher. Now, a couple things to note. Whenever you are looking at the tax rate for different areas, let's just say that it is 2.8%. If it is your primary residence, and then you can have the option to file a homestead exemption. So whenever you file a homestead exemption, you can expect that this percentage goes down a little bit, maybe to like 2.6 on average. And the other thing to consider too is just because you're paying $500,000 for the home does not mean that you're being taxed on that $500,000. The appraisal districts in Harris County or Montgomery County or any of the surrounding Houston counties, they're going to come out with an appraised value for the home, and based off of that appraised value, that's what the tax rate's going to be applied to. So even if you spend $500,000 on a home, the taxing authority might only value it at $400,000, and then you're going to have that 2.8% applied to that $400,000. And so people moving from other states often find that our taxes are a little bit higher. I do have to remind you, we don't have a state income tax, and the cost of living here is lower. So typically, when we look at the macro and we run numbers for clients looking to move here, between adding up what they're going to save in terms of no state income tax, plus the overall lower cost of living here, it typically ends up being a net positive for our clients. So homeowners insurance, depending on the age of the home, can range anywhere from $1,000 to $2,000 a year. We've got $1,200 plugged in as an example. New construction, typically insurance is going to be a little bit less expensive because the home's newer. There's a warranty, and then we're not going to factor in HOA dues for right now. Now, if you do look at any of the larger master plan communities, HOA dues are typically $1,000 a year, so you're looking at just under $100 per month. So at 5%, this is going to be your mortgage payment. Now, your mortgage payment, as you can see here, is comprised of 5 different components. There's 4 major components. We call it PITI, and that stands for principal, interest, taxes, and insurance. So your principal and interest is going to be the amount that you pay on a monthly basis to the bank. You're repaying the principal, which is the money that you borrowed, plus interest. Now, your taxes are what's going to go to the local taxing authority for owning real estate. Those are going to be your property taxes, and then you're going to have homeowners insurance. So anytime you have a loan on a home, you're going to have to take out homeowners insurance. Now, PMI, that goes away the second that you put down 20%. And so putting down 20% not only lowers your monthly payments by a lot, but then you can get rid of that PMI. So on a $500,000 house with a $100,000 down payment, which is 20%, you're just paying that PITI, that principal, interest, taxes, and insurance. And so a monthly payment at, let's just say 6.75% interest rates, you're looking, hold on, it's not wanting to let me adjust it, 6.75. Anyways, okay. This is why we don't like Zillow, everyone. So we'll go with C current rates. Anyways, 6.75. This thing hates me. Okay, anyways, skip that. All that to say, you're going to hop in this mortgage calculator and you're going to plug in what your sales price you think is going to be. And really the goal is to get this number right here using today's current interest rates to figure out what your monthly payment is going to be. And by doing this, you're going to realize that, hey, maybe even though you're approved for that $700,000 home, realistically, our budget's $500,000. We really don't want to go over $500,000. We're comfortable with this, monthly payment around the $3,500 mark. And so at that point, I highly recommend us only looking at homes that are in the budget of your monthly payment, not your qualification letter. I typically find with clients, and it's just human psychology, that they're going to buy the most expensive home in whatever budget they set for them. So if you set your budget, make sure you set it based off of your monthly payment, because if I show you a $400,000 home and a $600,000 home, you're gonna like the $600,000 home more 10 out of 10 times. And so I hope this helps. It's short and sweet, but this is how we do it. This is the process that we want to go through to make sure that we're not spending a month looking at $600,000 homes only to find out the mortgage, monthly payment later and being completely blindsided. So if you have any other questions, like we always say, give us a call, shoot us a text, send us a quick email. We would love to help you make a smooth move to Houston. And if you haven't already, subscribe to our channel and tap that bell for notifications. We are full of knowledge. We're sending out weekly videos. Go check out some of our other videos. We cover the entire Houston area, and our team would love to help you. So thanks for watching, and we'll see you in the next video.